Hello everyone, Brian Johnson with thestockmentor.com here with a daily wrap-up of today's market action. Alright, so the markets basically gapped up last night on the excitement that the debt ceiling information had all been taken care of. As it turns out, the markets really didn't care, and when the little guys came to the table today to buy up the market thinking everything's going to go upwards, this is it, this is the bounce, the big money was there to sell it right down from underneath of them and kind of bury the bulls again. So we're still due for a bounce here. It's not a big deal. A lot of people were maybe a little bit upset with how things all played out today. But especially if you were, going long, if you were bullish. But the truth is, we're very extended down here. We're looking for a bounce. Things ended up at some pretty tight overhead resistance levels. We're going to talk about that here in just a second. Here on the Dow, you can see how we have now come back down. Split below this little blue line we were watching. Now we're on our way back up. It's actually a nice trend line that falls right down around that 20-period moving average. Really watching for a long position above that 12,200 tomorrow. If we can get back above 12,200 or back below 12,000, I think those would be really good entries, both long and short on the Dow. Looking here at the daily, how pretty is that? As we see the move out retest of this blue line. So holding very nicely as well with the 200. That also always helps when you have strong support from a moving average rolling in underneath you. So coming down and into this lower support area here, you can see we're getting very extended. That bounce, I would expect to see it if we don't see it tomorrow within the next couple days. Usually when these bounces happen, guys, they happen fast, furious. The selling comes in, stops start getting hit, and it runs and runs hard. At that point, you get in at a good price. You have to be pretty quick, but if you can get in at a good price, you're usually good for 2 or 3 days within that position. So I wouldn't be scared out right away, especially, and you'll know, usually when you see it, it is very, very heavy to the upside. The 2 minutes are all high basing and everything's running straight upwards. It's really, really strong buying. And if you can get in at a good level, like I said, I think you can really, really start to kind of position yourself very well for the next couple days. Now, any further selling, I'd be watching very closely this 11,850, 11,900 area. Whew. Boy, a lot of good, strong support down there. Would make very, very good sense to maybe see a little bit of a bounce from that part. I think it's very defensible. If it doesn't go your way, you can get out and not risk a whole lot. So I would highly recommend you maybe be watching those levels if there's any further selling into tomorrow. Today, break-even day. We gap up, we move down, we come back to break-even, shake hands, walk away. Not really much to speak of there. Watch the levels we were giving you both on the 60-minute and on the daily for your trades, both long and short. If you want to build a long position, great. Do it slowly. Do it wisely. Don't dive in with a 100% position. Start with a 25% position or so and start building up from there. And look to start doing that right down around in this area. 11,850 to 11,950. Not a bad idea to be watching for that. NASDAQ here, same type of story. Coming back, got below the 2340 area, which I've had for a strong support for a while. Dipping down into 2320. We only finish back above the 2340 again. Flipping right to a daily. Make it really easy for you. We're coming into and getting close to this 50-day moving average for the NASDAQ. That's big. It's doing all it can to hold on up here. It's been actually pretty darn strong. I got to give it credit for not having broke below this level quite yet. But any further pressure to the downside, breaks of this 50-day moving average will be your next level to watch. Below that, the 200. 2282, that's another 40 points below it. I am not a big shorter of the NASDAQ. I'd rather short something else besides it. So be very careful with that trade because the first thing that usually turns around and starts running north is the NASDAQ. When and if we get that bounce, something else to think about. I love watching the NASDAQ for that bounce. When it turns, Apple starts going, Google starts going, Baidu starts going, and before long, at the end of the day, the S&P is up 20 and the NASDAQ's up 63. Something crazy like that. Usually makes for a very, very nice trade, especially if you're a futures trader like myself. You can get in with some contracts, hold for a few days, and make some pretty nice profits off that. All right, so you can see the NDX holding this 20-week moving average up here, still in a high base. You're looking for pushes, not only pushes, but closes below that by the end of the week. I am kind of more expecting a bounce, actually, in the markets before the end of the week. If it remains heavy selling all week long, we are in what is probably going to be a very major pullback in the markets, actually. But that bounce, I think, is coming here in the next few days, if not tomorrow, in the next few days, as I said. This I would expect to end up once again above the 20-week moving average by the time Friday closes. If that's true, guess what? Still a high base formation. The bulls will not leave the bears alone on the larger time frames like the weeklies. SPX, you can see a very nice channel to the downside. Further bearishness below 1275. I like it short there. Bullishness above 1300. That is your more conservative trade to the long side, as we have been trying to break but not been able to hold below the 200-day moving average. If you want a more aggressive short, you're looking for something just below 1285, 1284, 1283, somewhere around in there. Not a bad opportunity to take to the short side, but you better be ready and quick on the trigger to cover if things start to move the other direction. These bounces happen fast and furious, and they do not take prisoners. They bounce and bounce hard. As I said, then giving you an opportunity to actually stay in, but you've got to be, ready for the bounce. Anything below that 1285 into 1275, then I'm thinking 1265, 1260. A lot of good under lower support down here. Remember, it's about every 5 points. Very, very cautious with that trading. VIX also down for the day. Market's down for the day, so non-confirmation from the VIX as it hits this overhead area of 26. You can see still comfortably in and around and above 19 and 20, which is where I like to be a little bit more bearish on the markets, and we're clearly in that higher area, 23. 26 is holding well because it is the 200-week moving average up here in these upper areas. Now, markets bounce, it'll happen hard, it'll happen furious, and guess what will happen to the VIX? It will plummet. Welcome to Mr. Happy Red Candle by the time we're all said and done. It's going to bring us back into these 18 areas. This would not surprise me at all to see us close in and around 17 or 18 by the time the week is over. So on a bounce, watch for the VIX to plummet. Be very careful if you're an options trader, because that will mean, obviously, premiums will change as well. So you better be on the right side of that trade if you're going to trade the options. Above $23.25 on FAS, below $22, I think it's very clear. Going right to a daily, you can see it as well here. Below that $22 mark, I think that makes for a good short, telling me there are more lower prices yet to come. Right now, what we're in is really kind of a descending triangle. It's pretty close, really, to a descending triangle. That is bearish. Breaks below the 22 would mean more shorting. If we can get back above 23.50, that's not a bad start and not a bad entry for more of a day trade. And then back above 25 would be a very strong move by the financials to get themselves in and above those heavier areas of resistance. FAZ then above 50, love it above 50 here. Otherwise, stuck in a triangle. So anything between 46 and 47 I would not be playing with. Just let it do what it's going to do. Find anything else to trade. Join us in the trading room. I've got plenty of good stocks in there that we're watching right now, and plenty of good trades for everyone to take. But don't trade the FAZ between 46 and 47. It's just a mess. Above 50, though, I do like it above 50 as a long. It's probably something I'll be watching as well in our trading room in and over the next few days. That'll wrap it up for today. Keep in mind, these things can be very, very quick, very explosive to the upside. If you have the time and have and want to do it, I'm telling you, join the trading room. We had another good day today. Potential of like 400, 350, 375, I think it was what it was today. Entered a few stocks, didn't close out any though, so not much to report on the stock end of things, just because we've been really traveling downwards. I'm looking for things that we can maybe prepare for the bounce. And I think I've got some strong ones lined up. It's just a matter of, letting the setup happen. Be patient. We have a blast in the room. If you're tired of trading alone, and believe me, trading's a lonely business. If you're tired of trading alone, come join us in the trading room. We have a great community. Everybody's super cool. We don't have any jerks, which is so nice. Everybody gets along. We have a good time. I try to make it light. I try to keep it fresh, just like I do the videos. So if you enjoy the videos, I think you'd really enjoy the trading room as well, if you have the time to participate. Okay, I'll be back with you guys later on in the week. Have a good one. Bye.